You're saying that right now we seem to be doing pretty good and you expect this trend to continue?
Well, business confidence picked up quite nicely. And remember, business confidence fell throughout the whole of last year. So to see kind of a nice bounce back in the first quarter, I think it's welcome news. And also, as you rightly pointed out, confidence improved across all the 5 sectors that we covered. So it is relatively broadly based. Good news.
What is interesting is, where you've got new vehicle retailer confidence edging higher, and that pretty much expected because we had vehicle sales numbers act as a precursor to that. Building contractors' confidence increasing to a 3-year high of 31 points. Now, 31 still not close enough to 50.
Exactly.
But it certainly does come as a surprise.
Yeah, it does. I mean, this sector has been struggling for quite some time. If you look at the actual business confidence, the index, the level, I mean, it has been around 20 for the last 3 years. And now suddenly we're actually starting to see quite a nice pickup. Also quite encouraging is the fact that building contractors in the residential and building contractors in the commercial space both saw their confidence levels improve. It is still very low. I mean, the index level at 31 suggests that 7 out of every 10 building contractors are still downbeat.
Yeah, and what they seem to be confident about is the fact that we're going to see the rate of decline slowing. So,
yes,
you've also got to consider that how much more ground was there to lose in any case.
Indeed. I think another encouraging aspect is civil construction. Civil construction has seen quite a nice pickup in confidence. And that's certainly going to be a sector that should at least benefit a great deal from government's idea or intention of boosting infrastructure spending and so forth. So that sector is well placed to benefit from that.
Etienne, let's talk a little bit about manufacturing. That also seeming to have done quite well. It has come from some very low levels, and one commentator saying that when it comes to manufacturing, recessions and recoveries tend to appear first in the manufacturing sector. Do you think that when we look at today's numbers that this may have translated to our manufacturing numbers looking better?
Yes, I think this is a sector that's recovering, no doubt. Remember, in the second and third quarter, output contracted quite significantly if you look at the GDP data. The fourth quarter, we see quite a nice bounce back. Further improvement in business confidence in the manufacturing space in the first quarter suggests that the recovery trend persists. What is also quite important just to bear in mind is that while this sector may be recovering, but if you take output levels today, it is still quite a lot lower than the pre-recession peak levels that we've seen in 2008. So you're just talking about a sector that's catching up as opposed to a sector that is expanding at a dramatic rate.
We've also got to put some emphasis on this distinction being made between the local market that these manufacturers are catering to and then the export market.
Absolutely, and we clearly see that again. There's a discrepancy. If you're a manufacturer and you sell into the local market, you're doing okay because the consumer is doing okay. Consumption is still relatively vibrant. If you're an exporter, well, they continue to struggle. Right. And obviously, we have a situation where global growth is still relatively weak. Europe, a key export market, we're talking about potential recession there this year, perhaps even next year. And then once again, if you look at the dollar-rand exchange rate, for example, it's back into overvalued territory, and our forecast is that it can get even more overvalued over the course of over the next couple of months.
When it came to export, what actually has been quite interesting when we're talking about all this data that is coming in, as a lot of companies saying that they're seeing a lot of growth coming out of Africa. We talked to RMI that was saying vehicle sales, a lot of African markets opening up.
Indeed.
We were just talking to ceramic industries when it comes to their African operations, way outstripping what they did in Australia, for instance, much better than their South African performance. So going forward, is that something that you expect is going to feed into confidence for
Absolutely. We have to, as a country, you have to capitalize on that. I mean, there's no doubt that South Africa's export profile has changed a lot over the last couple of years. We export more, as you know, to the BRIC countries, but also Africa. In aggregate, I think about 15% of our exports, commodities and manufacturing exports, go to Africa already. So here it is critical for the government to continue to pursue free trade agreements with African countries, simply because our exports to that continent or to the continent and those economies have grown quite a bit. So I think there's a lot of value to be had in that kind of strategy, and our corporates following that.
Alishia had brought up we're going to look at the manufacturing numbers just now. Alishia had brought up a very important point. I think just before we started the interview, you were talking, Alishia, about the Seckam numbers and how it's different and how you measure the index differently, you and Seckam.
It's quite interesting that I think Seckam released their data yesterday. It also showed a bit of improvement.
Yeah, but 2-point improvement coming through, but still 2.4 points off the February level that we were sitting at back in 2011.
Okay, there's a very big difference in methodology. As far as I understand, Saki's confidence index is calculated after they look at a range of actual economic indicators. Are those indicators improving, deteriorating, and then they calculate an index. Our methodology is one where we actually survey people in companies. So we would send a survey to a CEO or MD in a manufacturing company, and we keep that panel the same every quarter. So we build quite a nice relationship with key people, decision makers in certain companies. And then we ask them a simple question. Are you happy with prevailing business conditions, yes or no? Right? And then we look at the results, and then we calculate the index we're talking about today.
So let's take a look at how closely sentiment is aligned with actual data. We've seen manufacturing output come in this afternoon, 2.4% year on year in volume terms. The consensus was, of course, for 2.5%, so slightly off, but pretty much in line with expectations.
Pretty much. I mean, you still, as we're talking about a sector that is recovering, not blowing the lights out, but an economy or a sector that, considering the outright contractions we had not too long ago, 6-9 months ago, positive growth, good for the economy. It's 15% of GDP. It employs a lot of people.
What are some of the risks that are being taken into consideration to this manufacturing sector continuing on this uptick path moving forward? Because of course you've got inflationary costs to bear in mind, and things like the costs of fuel, the costs of electricity, etc.
Indeed. I mean, once again, it depends on whether you're manufacturing for the export market or for the local market. If you manufacture for the export market, global growth matters. Growth in the countries you export to, the currency matters. It doesn't really matter if you're producing for the local or the export market. Domestic costs are important. Once again, clearly it is an issue. Also critical, obviously, if you produce for the local market, the consumer is key. And as we discussed earlier, there is evidence that growth in consumer spending is slowing down. It's still decent. Consumption is still relatively lively and vibrant, but it is slowing down. So there are quite a number of things that we have to
One
consider.
of the things that you've been quoted saying here in this report, a growing number of manufacturers reported increased levels of investment, and you were saying improved investment intentions bode well for higher actual levels of investment in the future, and you were saying that GDP growth in South Africa has relied way too much on the South African consumer.
This is very positive for me. This is the first time that we've seen convincing signs of manufacturers not only lifting investment, but also quite optimistic that investment in 12 months' time will also be higher. This is good news, because what we need to do is we need to see the balance in the economy changing away from the consumer. Consumption spending has driven the upswing for the last 2.5 years, and we now need to see more from exports, more from fixed investment. So the private sector seemingly is starting to invest more. With investment comes employment, productivity, and so forth. Now we have to wait for the public sector to do more in that space.
Of course, this is very retrospective. I mean, the surveys were largely completed before we had the 2012 national budget presented, and of course before the petrol price increase. Any sense that's been given about sentiment that's out there about outlook moving forward?
Yes, I think it would be very, very difficult for business confidence to repeat the first quarter results. I mean, 12 index points, for that to go up, by that same order in the second quarter, I don't think it's going to happen. And for the reasons you've given, we also have to keep in mind that the petrol price since this survey has gone up quite a bit, and the national budget was not that consumer friendly, considering higher capital gains taxes and higher excise taxes and so on and so forth. So my expectation would be that we would probably, confidence level would probably sit and hopefully slightly above 50 for the next few quarters, as opposed to significantly higher levels.
Etienne, a pleasure chatting to you this afternoon. Thanks so much for your time.